Let's put the spotlight on Cummins India. Recently, the stock scaled its life highs, and that's largely on the back of a pretty positive set of Q3 numbers. There was a strong operational performance as well, and the street clearly gave the stock a huge thumbs up. So let's talk about the road ahead for Cummins India. Ajay Patil is the CFO who's now joining us on the show. It was a nice positive surprise in the quarter gone by. It clearly beat all analyst estimates. But the question is, Mr. Patil, given the fact that we're looking at a pretty strong demand environment in terms of domestic as well as exports, do you think that this trajectory is going to continue? What's your guidance when it comes to your margins?
Hi, good morning to you as well as all the viewers. Indeed, I think quarter three was a fairly strong quarter for us. And you would have seen that generally speaking, quarter three among the four quarters is generally the strongest for us. And this turned out to be true for this quarter as well. Obviously, both the domestic and export segment did really well with respect to the quarter. We see fairly steady demand from a exports perspective. When you look at the 9 months numbers for the exports, I think our high horsepower and low horsepower businesses in exports market grew almost 14 and over 40% in the low horsepower segment. And we have seen demand growth across all the geographies, right from Europe, Latin America, Middle East, Africa, and Asia Pacific. Now, having delivered a very strong quarter, which is generally the best, as I said earlier, I think our endeavor is now to continue to sustain the growth momentum as we see the end markets, both at domestic and exports, holding up. The only caveat is there is still a bit of a supply chain constraint that we do see for a few electronic components. If that eases up a bit, I think our ability to deliver strong growth in Q4 is what we are working towards.
So, if I may reiterate then, in light of what you're saying, the fact that you are looking at a strong improvement, margins then we can understand will grow from the current levels?
I think, we haven't given a guidance, just to clarify myself, but our endeavor, as you would have seen in our commentary, which is very consistent over the last several quarters, is that we continue to find ways to expand our margins. We do believe that the lag effect of pricing, softening of commodities, and the volume leverage, when you put all of these three things together, should be in a position to sort of sustain or improve the margins. But just to reiterate again that this is not a guidance, but just our endeavor to see that we continue to work towards a profitable growth.
Now, Mr. Patil, going forward, what's the outlook when it comes to your order book? Do you think that Q4 will be better versus the historical growth that we've seen?
I think when we exited quarter three on a fairly strong order backlog as well as order board, as I said, we are still what we call internally a word called managed demand, which means we are not able to 100% meet the demand simply because of supply constraints. Keeping that in mind and our focus on execution as well as easing up on some of the constraints on the supply chain side, we do believe that on a year-on-year basis, we should be in a position to sustain our growth, what we have seen in the previous quarters.
Okay, that's the view coming in. Let's also understand the outlook when it comes to just wanted to take a look as to what the outlook is when it comes to the hike that we've seen, a 35 to 50% hike on power generation equipment. That's largely on the back of the implementation of the CPCB4 norms. Will this cause, a margin blip? Will the hike be able to actually convert your costs?
I think the CPCB4 plus norms for a particular range of diesel generating set is effective July 1st, 23, as we all know. So therefore, all the older emission engines can be made up to 30th of June. However, the gensets can continue to get another period of 6 months from July to December in order for them to continue to sell genset at older emission norms. What we have typically seen is a transitionary impact when we are looking at, let's say, the quarter two or quarter three of the current year. That is where we will see how the transitionary impact could be. That's number one. Number two, from now till June, potentially as a consequence of this, Historically, we have seen some kind of an elevated order position. We'll have to wait and see how that kicks in, whether it happens in the current quarter or it gets into the quarter one of the next year.
Also underline that supply chain constraints pose risks to the near-term outlook. What kind of measures are you undertaking to be able to counter this?
Yeah, as I said, the supply chain risk is very, very specific to few components, few electronic components. And certainly, we being part of a global integrated supply chain, our ability to secure supplies is far better than many. And as a consequence, what we have been seeing is a month on month improvement. However, the constraint remains. That's number one. Number two, also, given the fact that the orders are pretty strong, even though we are able to secure higher allocations of some of these electronic components, our ability to meet 100% of the demand may remain constrained at least for a few months, is what we currently see. But that doesn't mean on a sequential basis or on a year-on-year basis will not be growing. It's just the fact of how the level of order intake and the level, our ability to supply in a particular quarter or a month is.
Appreciate that. I'm looking at numbers and your commentary. Numbers are better than what your peer set has done. Your growth, if I compare with ABB, Thermax, Siemens, it's quite impressive. All those companies have given a guidance. While you're doing the best, yet you've not given a guidance. So is it like cautiously optimistic view, or you think that in the near term, the uncertainty is so high that you do not want to give a guidance?
I think what you said earlier is really where we are. I mean, we are cautiously optimistic given the uncertainty with respect to the supply chain disruption that we have, given that we are getting into a pretty significant emission transition phase. And number three, with respect to what happens on the macros as well as on the geopolitical, when you put all of these factors together, we just remained a bit more on a conservative side, and therefore didn't provide a guidance for the quarter as well as the year.
Appreciate your time. So glad you could join us, and look forward to see much more of you going forward.